Good morning. Welcome to IG's Early Morning Call. It's a midweek trading session, Wednesday, the 13th of December. Let's take a look at the headlines, awaiting what looks like another stronger start across the European equity markets. But once again, we continue to monitor what's happening on the foreign exchange markets because we've still got many of the pivot points of the week still to come today. It's 7 o'clock this evening UK time. We've got the US Federal Reserve deciding interest rates at that point. It's widely expected they'll leave interest rates on hold at between 5.25% and 5.5%. But the big point to watch out for is not the debate on will they, won't they. That's now past, that's history. We're now looking at whether or not the Fed's going to indicate its willingness to cut interest rates in the next move, but more specifically is what the markets begin to price in as to when we could well see that interest rate cut. Bank of England tomorrow, European Central Bank, just 45 minutes or so later on from the BOE. Take a look at what else has got as we see things break this morning. Half an hour ago, we saw some breaking news headlines coming through on UK growth, unexpectedly contracting by a margin of 0.3%. Consumers, oh boy, they're under a lot of pressure. And as we edge towards the start of today's European session, oil stocks very much in evidence as we see continuation of the drop in the price of oil. Brent and WTI yesterday falling to new 6-month lows. On concerns about oversupply, and we see a continuation of that trend in the session in this midweek trading day. Let's begin with volatility. Yesterday, another big candle leg lower, another 5-year low. We're currently trading at 1405. I think I can go all the way back to show you when this was last, where it was. You've got to go all the way back to June 2018, so the middle of the 2018 year was when we were last at these levels, and you can see the markets continuing to be depressed in terms of volatility, but that does mean that we've got some more positive activity on some of the risk assets. Not so much London, as I've just said about the price of oil. We've got this market on the way down, 75.54. We're now looking potentially at a slightly weaker start to the trading day. Also got some weak data just coming through that we've got. And in fact, now looking as though we could also possibly see a drop on the German markets as well. But we're not trading too far away from these record highs that we saw intraday in the session in yesterday's trading day. 16,853, despite the fact the German economy is, as we pretty much calculate that we've got recession in the German economy. The German DAX doing particularly well on the whole against some of the other European markets. In among other markets we've been following, we've got this closing record high yesterday on the cash session, but the CAC 40 today on the 24-hour market showing losses at the moment at 75.39. So we've got all sorts of interesting moves in the markets as we see some selling as the markets approach or are at new all-time highs. Let's take a look at what's been happening in the trading day on the Asia-Pacific markets in the session. The Japanese Nikkei 225 closing with a gain of 0.25%. We've seen a particularly good Japanese Tankan survey report out today. We'll cover that in just a minute. Wasn't a blockbuster number, didn't move the markets very much, but nonetheless it does show that the Japanese economy is moving in the right direction. The Nikkei 225 ending the trading day with a rise of 0.25%. Day of depression down in the Hang Seng stock index down to 1.25% when last looked. S&P ASX 200 up one third of 1% as at the close. Now, yesterday on Wall Street, we saw these markets rise to near 24-year highs. Gains across the board. The big moves coming on the NASDAQ, which is on the 24-hour markets, if we look at what we've got here now, trading just 2.5% away from the all-time record high. 16,384, 16,769. This red dotted line is where we are in terms of the record highs that we saw. We saw that push higher intraday back on the 19th of November 2021. That's the number to beat, and won't happen necessarily in today's session, but there's a lot of reasons as to start to buy into this. We'll take a look at Adobe in just a couple of minutes' time. One of the stocks to watch later on today after the closing bell tonight, which reports earnings. That being said, yesterday, let me just quickly show you what happened yesterday with the stock of Oracle, because this is one of the poorest performing stocks in the session. We'd already expected to see a drop of around about 7, 8, 9, 10% yesterday. And in fact, what happened as well, another 4.1% yesterday on the way down. Not too far away from this rising line, a shallow rising line of support that we got here established in the lows we had back on the 24th of May. To the stock closing at 164. Really tough 24 hours on the markets over the last day or so for Larry Ellison and Oracle. As a result of the concerns about the outlook in terms of forecasts. The concerns are that clients are beginning to rein in spending on cloud spend. And I think this is going to be the message going into the start of the session today ahead of the Adobe numbers out a little bit later on. This is the Dow Industrials. Yesterday we saw this market's spike to the highest level not seen since the 5th of January 2022, talking about those new near 24-month highs, just a couple of weeks away until we get to the 5th of January. And the market's looking particularly hawkish, particularly bullish, talking a lot about the Santa Claus rally. There have been a lot of speculation that the move up that we've seen had already bagged a lot of profits of people, and people were beginning to take profits at these lower levels. And when we saw this strike through the 35,690, which is the highest we had in the Dow back on the 1st of August, I bet there were a lot of people thinking, that's it, I'm going to bank my profits, I'm going to go away. But look at what they've missed out on. Anyway, if you are still long on this, you want to continue to bring your stop loss up, keep it tight. Get yourself stopped out if there's a reversal, because when the reversal comes, the speculation is that there could well be a little bit of a tumble. It's just a question as just to what it is now that's being priced in terms of US interest rates. Later on today, the Fed comes out with that interest rate decision at 7 o'clock this evening. I'll cover more details on that in just a minute. This is the S&P 500. In yesterday's trade, we peaked there up at levels not seen since the 14th of January 2022. This red dotted line is the record high at 48.18. 46.94. The market's not too far away from that. In fact, let's just do a quick calculation to work out roughly what we got in terms of the percentage move that we're looking at there from where we are. 3.6% we've got to make up on the upside if we want to see this market rise to an all-time record high. Not quite as close as the Nasdaq, which is only 2.5% away, but nonetheless, it is being benefited by the buyback into some of these big tech stocks. Now, let's just quickly run round and take a look at what else is happening, because I just want to focus in on the pivot point today, which is the Federal Reserve interest rate decision at 7 o'clock this evening. It's a tough balancing act for the Fed to undertake in the face of intense pressure to reveal when and by how much it intends to cut interest rates. While the labour market is resilient and consumer spending is solid, there are signs that slower growth is coming through, and in turn also the market's impacted by higher or persistent inflation. Let's take a look at yesterday's inflation numbers that we saw. US consumer prices out just before the bell yesterday on Wall Street. Closely watched inflation gauge increasing 0.1% in November, was up 3.1% from this time last year. Now, if you exclude the volatile food and energy prices, the core CPI increased 0.3% in the month and 4% from this time last year, in line with the consensus. Now, a 2.3% drop in energy prices over the period helped keep inflation in check to a degree. Gasoline down 6%, fuel was off 2.7%. Food prices, though, increased by a margin of 0.2%. I want to show you what's happening with the dollar basket before we drill down into some of the other trades worth looking at ahead of the Fed interest rate decision today. 103.54, you can see we're just off the highs after this little mini rally that we've seen for the dollar. So it's a little bit of a jittery market. We've very little change this morning ahead of the Fed decision later on tonight. Just quickly explain what the Fed's expected to do. Keep interest rates on hold at 5.25 to 5.5%. That's a 22-year high. And that's what we are expecting. The FedWatch tool on the commodities exchange forecasts a 90% chance of a Fed rate cut by May next year, with a 60% possibility of a cut in March. So that's a little bit more dovish, I think, than many had been expecting, certainly just a couple of months ago. We'll have to see how things develop today and what the CME Market Watch tool is talking about tomorrow. And we'll take a look at that after that Fed decision later on tonight. Now, as I said, in Japan, we've seen some pretty good economic data out overnight. It is one release from the Tankan quarterly survey. The large manufacturers sentiment index has been published. It climbed 12 in the fourth quarter of this year from 9 in the previous quarter, pointing to the highest print since the first quarter of 2022 and exceeding the market consensus of a margin of 10. Now, as we've just seen, we've got a rise in the price of the Japanese Nikkei 225, up 0.25%. This is the dollar trading higher against the slightly weaker Japanese yen at 145.18. Not much of a bite necessarily in terms of the broader market. the yen holding on pretty much to its position it was at before the release of the data. Now, the pound is on the way down in today's session after data showed that the UK economy unexpectedly shrank on the month-on-month data in October. Let's take a look at the figures. Gross domestic product falling 0.3% in the month of October. We had been looking for a flat number. GDP, 3-month average, flat. The consensus had been for an expansion of 0.1%. Now, the British economy unexpectedly shrank. We've been looking at a flat number. Comes as households and businesses come under growing pressure amid the cost of living crisis. And it comes after growth of 0.2% in September. Now, today in these numbers, there's been contractions across pretty much every single sector of the economy. In fact, all. The UK's dominant service sector was the biggest driver of the drop in output, with declines in IT, legal firms and film production, according to the data. These are compounded by widespread falls in manufacturing and construction after poor weather led to a drop in activity. You can see also here industrial production rising 0.4%. We've been looking, though, for a consensus of a rise of 1.1%. And this latest data could well strengthen the case of the Bank of England to signal that it's meeting tomorrow that it may cut interest rates sooner than many currently believe. Let's take a look at this chart here. We are currently 40 minutes after the release of the data. These are 5-minute candles indicating that we've got this big decline, relatively speaking, in the price of sterling against the US dollar. This was the candle that represented that drop as a result of the concerns about the contraction in the British economy. Interest rates are high. That's the problem. That's the message. The Bank of England know what's happening. They know that consumers are under pressure. They know that people haven't got the money to spend on discretionary items. They know the winter's coming, and they know that more pressure is going to be brought to bear on personal household budgets because of the price rises that we're seeing again coming through in the fuel costs. And of course, food as well, high as well. Inflation certainly not beaten here in the UK. But nonetheless, expectations potentially now could well be to see whether or not the Bank of England has any appetite for cutting interest rates from the recent move that we've got. Just to quickly go back into the daily chart, just to remind ourselves as to where sterling is trading. We've got mindful of the fact that later on today, we've got that US dollar side of the story with the release of the Fed interest rate decision at 7 o'clock this evening. UK time, no move there expected. All this coming ahead of the Bank of England at midday on Thursday. Now, let's take a look as well at what else has been happening, because I wanted to bring up some more detail about what's going on in terms of some of the other economic data. We do have some data before the Fed tonight. We get US PPI data out. US producer prices out at 1:30 p.m. today, UK time. We'll be covering that live in Beat the Street with Angeline Ong. We are looking for a rise of 0.1% in November, month on month, up 1% year on year. Core PPI forecast to increase by a margin of 2.2% year on year. I promised you a look at what's happening with the euro dollar. We're currently trading at 107.85. Now, going into the Fed decision tonight, if you're long on this, your stop will go underneath this line of support down here. So your stop just below the 107 level. 107.85, 86 is where we're trading at the moment. If you think that there's a rise here, in other words, weakness of the dollar, if the Fed does indicate it's now in dovish mode, I think we could well get a little bit of a buy for the euro against the US dollar. We'll have to see how things go. But it's the Fed's appetite for looking at something that could well give some sort of indication about its positioning in a lower interest rate picture next year. If it doesn't do that, and it does say that it's mindful of the fact that inflation is still with us, it may well be that we might end up seeing a lower euro because the people will be buying back into the dollar. It's all to play for at 7 o'clock this evening. Now, one corporate news headline I wanted to cover. I said it was fairly bereft of news today. It is all about what's happening with Adobe Systems after the bell this evening. Let's take a look at what we're expecting for the quarterly report today. The street anticipating fourth quarter earnings of $4.13 per share on revenues of just shyly above the $5 billion mark. Now, the stock is currently not too far away from a 2-year high. Let me just I'll go to the long-term chart first of all, so you can see where we are in terms of the record high at $699.50. In terms of some of the trades we've got there at the moment, let me just show you what's going on with that record high there, just above where we are. And the stock will open today. It's not an all-session stock. It'll open at the cash session today at $633.52. Those earnings come out after the bell this evening. Let's just stay on the charts and take a look at what's happening with the price of oil before we take a look at yesterday's release of US crude oil inventories. The downward pressure continues. Let's look at the chart of Brent here today. Yesterday it was a big drop in the session in yesterday's trade, down to 6-month lows, down at levels not seen since the 28th of June. And we got a further print lower today at 72.69 for Brent. Not too far away now from this line of support I got drawn down here at 71.84. We've got a lot of congestion around this sort of area of support worth looking at. You get a break of that, and then you're down onto levels not seen since December 2021. So the downward price of oil continues. Last week, crude oil inventories fell by 2.35 million barrels, according to the latest API data. Gasoline and distillate stockpiles rising, respectively, by 5.8 million and 300,000 barrels of oil for the week. Let me just end up with what's going on the price of gold. Yesterday, I was talking about this line of support at the 76.4% retracement, and as good as it is, the Fibonacci holding up. Today, we have seen a new spike lower, taking us down to levels not seen since the 20th of November. That was intraday. Then the buyback came in. I think people are looking to defend this line of support at 1976. If you get a candle close beyond there, you're on the way down to a total retracement at 1931.7. That has yet to develop. I don't have a position on this after having succeeded in moving the price target, as we saw, all the way up to this record high at 21.21. This pullback has been fairly spectacular in its size and the speed at which it's undertaken. But this line of support is not unsurprising. That's it from me. 14 minutes to go until the start of the day's European session. We're now looking for small losses across the board on the European markets. I think the takeaway really has been the shocking contraction number. I say shocking, it is a contraction. We were expecting a flat number for UK monthly gross domestic product. And that's certainly taken sterling down. Concerns are about that, but it's not just that. It's the fact we've got a drop in the price of oil is likely to affect some of the oil stocks, continuing to see depressive markets there as a result of that. But don't forget, we're looking in the context of record highs. The CAC, we're looking at record highs for the DAX. And London markets, well, on the way down, mainly because they're so dominated by those mineral companies. We're back at 10:30. We're charting the markets.